So I think we've touched on your investment philosophy a few times, and it would be great to really get you to expand on it now because it is a fascinating one. You know, you've mentioned the idea of unfair fights. You've mentioned the idea of monopolies with great managers. So it would be great if you could really expand on your investment philosophy and how you invest.
Absolutely. So, first of all, there's a lot of things to get right in philosophy, but I think there's a lot of ways to make money. And there's frankly a lot of ways to make money, more ways to make money in the short term than there are in the long term. And you have to decide where you want to play in the spectrum. But first of all, I want to just say there is no right way in philosophy. There is no way. There's lots of ways. In fact, I think that's one of the most fascinating things about investing is there are just so many ways, right? And I think what makes them interesting is you have to work out empirically why a strategy is going to be enduring, and then work out how to actually exploit and monetize it. And so for us, this is, by the way, just as a reminder of this is a multi-trillion-dollar industry we're competing against, right? And if it was easy, trust me, it's not valuable because everybody's trying to do it, right? So you have to work out what it is about the enduring patterns, decode it in real depth so you can hold up under extreme volatility and be selective in deploying your time, and then rinse and repeat it. So here's a couple of things for us. I spent almost 15 years decoding the right and the left tail of capital markets. What that means is studying the base rate, breaking apart company after company after company through case study methodology, what had really worked on 5 and 10 year rolling bases. What was the defining factors in these stocks? What drove the math? Like, this is the one over my way I picked Santos, right? Is like, you've got to be able to look at this universe of 3,000 plus global stocks. And why is it that these are the 20 that you want to invest in? And what do you want to spend your time on the 30 or 40 to, around it? And once you have conviction that you understand it, your use of time increases through the roof. So what is our philosophy? And here are the base elements to it. So the core tenet of what we do is we invest in emergent and established monopolies and oligopolies that grow earnings power 20 to 30% plus and trade at reasonable prices. It's a GARP type strategy. So let's break down each part of that. First of all, we think game selection is the most important thing you ever do as a leader and as an investor. What does that mean? Pick a game that you can win that's valuable. If you don't do that out of the gate, you're already playing from behind. So that's the whole notion of unfair fights. Unfair fights is twofold. One is we back companies that have extraordinary high win rates. Why? Because then all you're focusing on is pricing inefficiency. That's a lot easier when the two things are fluxing. If you pick the first game really well, you just wait for the right entry point. The second part is then you as an investor have to find the right, why it's an unfair fight. If you're why is it me to be able to monetize those investments? And you have to have good answers to both. The next part of this is the industrial design. And two parts of this is, first of all, we firmly believe in preparation. We believe markets are efficient most of the time, but not all the time. And it doesn't take a lot if you run a concentrated portfolio and you're prepared to be able to exploit that. So one of the core elements of our philosophy in our true north is we believe earnings power or free cash flow per share over time is the number one driver of total return. In the short term, which we would define as less than 2 years, multiple is what drives the majority of return. From year 3 through 5 or hopefully 10 plus, it's almost exclusively earnings power. So what you want to be able to find are businesses that have enduring, powerful earnings power, get them at a reasonable price and let them loose. And that's the reason why we centered on emergent and established monopolies and oligopolies. When you have great businesses that can grow fast and they're really protected and immunized from strong competition, you get to capture strong rents. But the last part of this is it needs to be matched with an industrial design. And so our industrial design does not require a single new stock in any given year to generate in-year performance. In fact, in 2017, we bought one stock spanning 17 months. It was a big year we had that year, right? And then in a crisis, we might buy, it's hyperactive for us is 3 stocks. But we're prepared. Our guys and gals are always preparing. Where, you know what, for us to be lucky, we have to be prepared. And so the thing that we can control is how prepared are we. We can't control when our stocks actually perform. We can't even prepare or determine when they'll go into the portfolio. That we have to cede to the market. but we must be prepared. So those are the key elements of our philosophy.